Good morning, everybody. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I hope you're well. Um, it's the weekend, the 25th of March, so I thought I'd do a video looking at weekly and daily charts, looking into next week. So we're going to run through it fairly quickly. Just a quick note: the next TIOF webinar we're looking at. The 31st of March. So that will be the 31st of March at 8:30 p.m. UK time. Bear in mind the clocks sprung forward in the UK overnight, so it's the 31st of March that we're looking at 8:30 p.m. UK time. So if you're interested in attending that, just send me your email address to storehouseanalytics@gmail.com. Okay, let's get into the charts now. So we're going to start with the US dollar, just looking at the weekly and looking at the daily for shorter term income. So we can see on the weekly there hasn't been too much movement. We're still caught in ranges with these markets. So we're still caught in that range being the supply above and the demand below us. We're still going through the motions around here on the weekly chart. As we've said in previous videos, there is demand down here and there is supply further up here. For now, we need to see the resolution of the supply and demand imbalance. Right now, we're in a balance situation. There is very little imbalance right now. Taking a look at the daily chart on the same market, you can see that consolidation much clearer. This is the supply zone that is still holding price down, and we have some demand at the base of the consolidation that's still yet to be tested. So we are coming off of the supply. As you can see, it's been tested a few times already, and right now are in the middle of the move. So this is the range that we're looking at. We'll see what happens. Obviously, with these kind of ranges, watch how they go. The longer they stay, the bigger the move will be. So we'll be watching over the next few days and weeks for a breakout. So that's the US dollar. Looking at the Australian US dollar, again, we are caught in a slightly bigger range compared to the US dollar. That's the range we're looking at, not going very much in terms of distance traveled in that range. In terms of supply, we still have this big area that is still holding prices down, and we have that area down there. That is the one that is fresh below us. There's a little bit of demand also here, so it might be worth keeping that on the charts as well. So we are kind of stuck in there. Again, you'll see this whole area seems to be just one ginormous sort of range. In fact, you can go all the way to the bottom. So we are possibly after a big drop forming a big base here. So it's one to watch to see if we eventually break out. That will be a significant area to break out of. Obviously, if we continue dropping and break through these demand zones, we have a demand zone that is down here that's held prices down as well. So if we break through all of those and go down, that will also be a significant event. But for now, we're just in between these ranges. So not a great time to be a longer term trader in these markets, but definitely the time will come for that once we get the breakout and we enter what's called a stage 2 trend stage. So looking at the daily charts, obviously we can see that we are coming down into this demand zone. We haven't reached it just yet, and we have had big attempts to try buy it up and been sold off again later. And we have supply above. So ideally, the most appropriate action to take right now would be to wait in terms of short-term income trades. We're not quite yet at demand yet, and we're quite a ways off of supply. So we'll see what next week brings for the shorter term income trade in this market. Looking at the euro US dollar itself, which would be the opposite for the dollar, we are still sitting into this area of supply up in here. We have taken out a little bit of demand in here, but we haven't gone anywhere since we've done that. We don't have a clear defined new supply zone above here, Maybe on a smaller time frame you can see that, but on the weekly we don't have that. We still have the supply above here as well. In terms of demand, you want to go down to this area and obviously that area. Those two would be ones to watch. So we're closer to supply right now and banging our head against this supply zone. If we break it, that's the next area that we have to break. But watch this area. If we do break above this supply zone, we may have some demand formed in here. There has been a lot of time spent in here so far, so it probably will not be that quality unless you come higher and form a rally base and then rally again into this area, in which case you'll have an objectively qualified demand zone somewhere in here. But for now, there's been quite, this is a weekly chart, so we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks spent in this range. Yeah. So that's the weekly view for the euro, and the daily view for the shorter term income trades. Again, look what we got. We've got a range again. So the currency markets, at least the major ones, have got ranges on big time frames. So for a short-term income trader, this is a great time, selling near to the supply and buying near to the demand, and just keep doing that until the range breaks in either direction. So we've had a big move up, now we've gone sideways. So are we basing for the next leg up, or are we basing as distribution to come down? Supply and demand levels, as they get broken and created, will show us that as it happens. But for now, playing the range on the euro is probably the safer bet. As for the pound, looking at the pound, we are still in that strong uptrend. We've got new demand created just below here. We've also got supply still sitting above there. Like we said, that wick, the Brexit wick, just missed it. So we are still going up. We're removing supply zones now. We've had a short-term pullback, try to get below the demand there. We managed to wick out of it, but whatever supply that did take that out has also now been removed by this move higher. So it's one to watch. Definitely a challenge to be shorting, because every attempt to short it has been very short-lived. So for short-term income trades on really small time frames, yes, but the bigger trade has been to go long in this market. That's on the weekly chart. Taking a look at the daily, you can see as we approach, we're forming pretty good looking levels, several of them in the daily chart, and we're hitting that supply right now. Clear uptrend on the daily, so we have these demand zones below us. So those are ones to watch going into next week. It's a shorter trading week. Obviously, it's Easter weekend next week, so keep an eye on that. Next, we have the New Zealand US dollar. Again, caught in a big range up in here. This is the range that I refer to all of this. And that's been going on since 2016. It's a weekly chart, so banging our heads against the top of the range, against the bottom of the range, and just going back and forth. So again, probably the most appropriate strategy would be to play that range if you are trading this market. So these are the big levels of supply and demand. Supply has been tested a few times. We're back under it now, and we're basing slightly just below it. We have that supply still yet to be fully taken out there, and it's falling away. We are being held up by this demand. So you can see when you go closer, the range is even tighter, limiting the profit margins. Now watch this area, because we've had supply tested quite a few times, even if you count that one. It's been tested quite a few times. It's gone deeper into it. If we continue to base here, it may be that we break out. It increases the chances, shall we say, of a breakout to the upside, because coming back up near supply, we are not getting as quick and as fast a move down, suggesting that maybe the selling up here closer to supply is beginning to abate. Now we won't know that for sure until we have a breakout on either side. But for right now, buying would be the more challenging trade. because of just where we are looking at this entire range. So that's the weekly chart. Let's take a look at the daily. So on the daily, we're having lower highs and lower lows being formed. We have supply up in there, and the demand level that is still holding price up is that one. We've come back into it deeper a second time, as one would expect. We're bouncing up. Will it go high enough for us to get short in there, or will we continue down? For now, we're in the middle of the move. So nothing to be done immediately right now for the New Zealand US dollar. Going to the US dollar Canadian, let's take a look. Okay, so we're having a push up now. We're forming demand zones in there. So we're obviously creating demand zones now. We're making that, and we've got supply above us. So we've had an immediate return into this area. So if one must trade it, because the markets obviously have not accepted this initial imbalance, if one must trade it, maybe trading it at the extremes or looking for the formation of new zones inside there on a smaller time frame. That would be what to do for the way that I trade it. In terms of the daily chart, we also have pretty good looking levels for supply, and we are hitting that demand. Like we said, this is inside that weekly area that we said was an immediate return. You can see the attempt to go down. What we've created on the daily is now this new supply zone. So we are kind of going to be stuck in this range. If we break lower, obviously we're going to be left with a base drop in this area here. So keep an eye out on that one. Okay, and the US dollar Swiss. Okay, so nothing really exciting here. This is just for want of something below us to draw. That's what we've got. And in terms of something above us, quite wiki zones. It's not a market that you would be enamored to trade really. We do have a little bit of demand here as well. So probably because the move away is not great yet, you might want to look at that for a possible confirmation trade inside here. Watch how prices come back in and let it come in and base. That's what I would do. Of course, it's not a recommendation to trade it at all. I'm just giving my views on the way that I see the levels right now. So looking at the daily chart, we are hitting into demand on the daily chart. We've got supply above us, a pretty good looking supply zone. So we'll see how that pans out. If we get a move out of it, you might want to watch that area. At least I will be watching that area to remove any longs if I do take a long in this market. Okay. Now the US dollar Japanese yen falling hard on the weekly. We're just going to combine this whole area up here. We are forming new supply here as well, but it's not yet fully formed. In terms of demand below us on the weekly, oh gosh, there isn't much else until roughly that area. That's not great. That's a bit better, and that's definitely better. So we are beginning to drop, so we're creating a lot of these quality supply zones. So it suggests that the US dollar is going to have a bit of a rough time for now against the yen until we get some demand coming into the markets there. And looking on the daily chart, let's take a look. The daily levels that I see will be sort of there. I think we've just about missed that area. In terms of demand below us, looking on the daily, we just have that long wick. There isn't anything there. Demand is really far away on the daily. It's really far away. In fact, it's not really worth looking at. Probably down in here somewhere, definitely down there. So we have supply above us, no quality demand below. I mean, you could even use that because the demand is so far away. You could look at that supply as well. And consider that because that's where the big move out has come from. So the US dollar looking really weak against the yen. Taking a quick look at gold. This is a market that is on the roundtable watch list for the guys that I mentor. We are keeping an eye on gold. That's the supply zone that is still above us. We are still working our way through these lower ones, though we still haven't broken through them. we are now basing right below, which is interesting, and we have demand down in there. So it's been again a market that's been in a sort of range for a while, for maybe a few years now, looking 4 or 5 years now, not really gone anywhere in that market. Now we're at the top end of it, so we'll see if we this year with the equity index markets and the dollar making a move, that will also have an impact on gold, obviously. So we'll see how that pans out. But we're watching gold for a possible breakout to the upside. Um, that's the consideration we're giving it for now. Now looking at the daily chart, we are stuck in that range. So we have supply up in there. We've come back into a demand level again, that immediate return bounced up. Not so keen on that level now, but we have demand below there. It's a range. You can see the whole entire picture right there. It's a range, just going back and forth. Okay. Looking at the US oil, WTI, I believe that is. Have we broken this area yet? Have we broken this base drop yet? Not quite. We've come back into the base rally for sure, which we talked about, I think, in one of these videos, or maybe not here. So we are again back at that level. We have some demand forming below us. We'll see how far that carries through. If we end up being in a range, again, we have the upside clearly defined, we have the downside clearly defined. Until we get a breakout of either one of these levels, it's a range play for now, at least on the weekly chart. So not really great times for longer term income traders holding for days and weeks, but for the shorter term income trading, it's been quite nice being in these ranges, going back and forth between the levels. Supply is up there, we have demand down in here, and it's a few levels down in here of demand as well, and then obviously the lower one there. So a range again. How many times have we said that already today? So that's oil. Now let's take a look at copper before we finish. So on the weekly chart of copper, let's see if we've touched this area. Yeah, we have come back to it once. It was not, in fact, twice. We've come back to that level twice. So the next level we'll be looking at in terms of freshness will be that. We are still holding the demand area there. That's forming the bottom of this whole sort of sideways pattern here. We have a little bit of supply forming up in here now with the move this last week. So keep an eye on it, and we have demand down in there. So these are just levels to keep an eye on if you're going to be trading them. You definitely don't want to be buying into supply, and you definitely don't want to be selling into demand. With the demand zone that's been tested several times, it's likely that prices will go deeper into it, possibly even break it. But we don't know that until after the fact, and then we will take action on that. Now looking at the daily chart, we have big supply zone. Whoops, where's that thing? Big supply zone there. We have another one up in here. That one's a bit too wicky for us to consider it as supply. We're running up against this demand zone, which is we'll see which side wins if we push through even better for this supply zone. Right now, it's quite big for us to even consider just placing a trade there. We'd have to wait for prices to come in and see what it does when it gets up there. So for now, it's quite a challenging market, playing both sides, not being too aggressive on any of those trades because you're in a range. So that's what I've got for you guys. Hopefully that will help you going forward into the week and maybe possibly even longer with the weekly views that we've looked at. So again, for anyone who's interested in attending the Trading Institutional Order Flow free webinar, we're looking at, as I said, at the 31st of March at 8:30 p.m. UK. If you would like to attend, just send me your email address to storehouseanalytics@gmail.com. I wish you well, trade safe, and take care, everybody. Bye for now.